Hey everybody, it's Ian Beamer with Guaranteed Rate. Hope you're doing well. Happy February. I am brimming over with anticipation for the unofficial start of the spring market this weekend. I'm giddy. I love this time of year. This is like a second Christmas for those of us in the real estate industry. So very exciting. Lots of economic news since our last update in January. We'll start with the unemployment numbers, which came in just leaps and bounds ahead of expectations. We added a few 100,000 more jobs than economists were expecting. So that did push interest rates upwards. That was a couple weeks ago. That was early February, end of January. In addition to that, a few days later, saw the Central Bank of Mexico raise interest rates in a surprise move by 0.5 point in an attempt to stave off inflation in Mexico. So that kind of pushed our rates upwards. Same day, we had the U.S. Treasury Bank auction off the 10-year U.S. Treasury bonds. That was not well received. Not a lot of interest in those Treasury bonds, and as a result, those yields or interest rates had to be pushed higher in order to spark a little bit more demand for those products. So lots of upwards pressure on interest rates. This week, we saw consumer price index numbers come in slightly ahead of the expected inflation numbers. So we came in at 6.4% versus 6.2%, which was expected by economists. All of this going on simultaneously while Fannie Mae and Freddie Mac is adjusting their loan level pricing adjustment matrix. So this is huge news. This is going to have a ripple effect through all mortgages, even portfolio loans, jumbo loans, etc. Prior to these adjustments that are now in place, the highest credit score without any adjustments to the interest rate was 740. Fannie Mae and Freddie Mac have adjusted the highest credit score threshold now to 780. So they've gone up 40 points. A lot of people call mortgage professionals and they ask, first question out of their mouths is what's your interest rate? And a lot of that, I would say 90% of that, 98% of that depends on you. So in turn, we typically ask, what's your credit score? How much are you putting down? Is this a primary residence? Is this a second home? Is this an investment property? Is it a single family home, a condo? Is it a 2-flat, 3-flat? What do you do for a living? Are we waiving escrows, etc.? All of these factors are factored into these loan level pricing adjustments that are set by Fannie Mae and Freddie Mac. So I want you to look at the chart below. This is just for purchases. This is just for single family homes. The attached condo matrix is a little bit different. Refinance matrix is a little bit different. 2 flats is different. This is just an example. This is just single family homes on purchase transactions, and this is just factoring in the credit scores and down payments. So you can see, again, 780 or better, no adjustments in terms of credit score, and then minimum down payment without an adjustment to the interest rate is 40% if you're below that 780 mark. So keep that in mind. Pay attention to that matrix when you're shopping for a loan. Reach out. I'd be happy to discuss this. If you're a first-time home buyer, if you're buying in a certain area, if you're making below a certain income, there are ways around these adjustments. We do have all kinds of portfolio programs to try and get around some of these. Some of these we can be very aggressive in getting around. Some of them, it is what it is. So definitely worth the conversation, and this is where the experience and the knowledge of your loan officer makes a huge difference in the products that are available for you. So take a look at that matrix. Let me know your questions. I look forward to discussing. I wanted to talk to you about inventory. Inventory nationally is down quite a bit. Nationally, we've seen January inventories drop for several years now in the Chicagoland market. That really hasn't been the case until 2023. So 2023, we saw a big drop in January inventory in the Chicagoland market. Buyer demand is as high as I've ever seen it. Applications are way up this year. Lots of interest, lots of buyer demand. We're seeing prices climb up. A lot of buyers are having trouble getting their offers accepted, even when they go in at asking, even above asking. Multiple bid situations, you're coming up against cash buyers. This is where having a savvy real estate agent help you prepare your offer comes in huge. And if you're a seller, you also want a savvy agent to help you kind of sort through your offers. So you've got to know, this offer is $1 higher than that offer. Is that one better? Well, not necessarily. How strong is that pre-approval? Is it a bank you've heard of? Is it a lender that you can get a hold of? Can you reach out to that person and say, tell me what you can? How quickly can you turn this around? How quickly can you close? Is this a solid buyer? What have you seen? Have you reviewed pay stubs, bank statements, W-2s, etc.? What kind of program are you offering? How quickly can you close? How do we need an appraisal, etc.? All these things factor in. So what we are offering at Guaranteed Rate is what we call a power bid pre-approval. So this is a fully underwritten pre-approval, helps you compete, make the strongest offer possible so you can compete with cash offers. You make the power bid pre-approval. This is fully underwritten pre-approval. We verify employment, assets, your credit report, make sure everything's signed off on. We have no conditions other than the conditions that are associated with the property. So possibly an appraisal if we can't get an appraisal waiver. And if you can let me know the property address prior to you making an offer, we may be able to see if we can get the appraisal waiver before you even make the offer. So that just strengthens that offer for you, helps you compete with these cash offers. If you've got a savvy agent, maybe you want to do an appraisal rider depending upon your down payment. Maybe that's a possibility. And really the only other condition that we'd be waiting on would be title. That comes from the seller's attorney normally in Illinois. And the title would be a condition even for a cash buyer. You got to have clear title. You got to make sure whoever's signing that purchase contract had the right to do so, and they do in fact own that property. So I'm happy to help. You let me know what your hurdles are, what you're facing out there. I will address those concerns. I will do all I can to make sure that we help you get into the right home with the right product and prepare you for your homeowning future. So appreciate you checking out this video. I'll be around all weekend. Happy start of spring market, and I look forward to hearing back from you soon. Have a great day.